Sir, may I have a question,
Yeah.
sir? What if, sir, the account non-current asset or disposal group classified as held for sale shall be classified? Does it mean that the account non-current asset or disposal groups classified as held for sale shall be classified as current asset?
Yes. That's why one of the other things I want us to take away also, class, is as to how they will now be classified. Okay, so you have now a piece of building, class. Sorry, you have now a building, and normally, while it was still an item of PPE, it is to be presented as a non-current asset. But because of the change in purpose, class, because of the intention to sell it, class, and later on we would see that the for it to be reclassified, class, under PFRS 5, the intended sale must be completed within 1 year. And since there is now the plan to sell it within 1 year, class, then it will now fit the definition of a current asset. And again, that's one of the things I want you to take away. How are non-current assets held for sale classified? How are they going to be presented in the financial statements? Are they going to be presented as a current asset, or will they still remain as a non-current asset? And the answer, class, is that it will now be classified as a current asset, as mentioned by your classmate. And that's one of the reasons, class, why many students would get it wrong, especially for problems asking you to compute for total current assets, compute for total non-current assets. Because if the problem will state there, non-current asset held for sale, many students would think these should be added when computing for total non-current assets because the name itself already states non-current asset held for sale. So it should be part of your non-current assets. That's wrong. Because it is already held for sale, because it is reclassified under PFRS 5, it is to be reported as part of your current assets. That should be the second takeaway for today's discussion on PFRS 5. Number one, measurement, lower of carrying amount, and the fair value less cost to sell. Second, that they will now be considered or classified as a current asset. Very important, class. Many problems will mention non-current asset held for sale. And for some reason, students would insist on uh, including it when computing for non-current assets. That is wrong. It will now be classified as a current asset class. Now, paragraph 5, class, would tell us as to items that are not covered by PFRS 5. Uh, but supposedly, these should no longer be, eventually, these should not be difficult to remember anymore because the reason these items are not covered by PFRS 5 is because of the fact that they are covered by another standard. Okay, so deferred tax assets are governed by PAS 12, employee benefits are covered by PAS 19. So, unless there is a standard that applies specifically to them, by the time you become familiar with the other standards, it would be easier for you to remember whether certain transactions are governed by PFRS 5. You'll notice that these exemptions from the coverage of the standard are very common. If you've gone over past 40 or past 38, you will have similar exclusions. So at at present it's important. It's understandable if you might feel that you need to memorize these things, but later on, class, this would really just become second nature to you already. This will no longer be confusing. Okay, but you have to give this the appropriate focus because this could be a good source for a multiple choice question. For paragraph 5A, class, this is a new amendment to the standard. They just want to be uh, technical, class, because the provisions in PFRS 5 will also apply to assets that will be disposed not through a sale but as a distribution to your shareholders. Normally, the duty of the corporation, class, is to give dividends to its shareholders if ever it is profitable. And the most common type of dividend, class, would be in the form of cash. Okay, cash dividends would be your most common kind of dividend. But it is also possible that the corporation would be giving out property dividends, dividends in the form of property, in the form of assets other than cash. So basically, you will have an asset that will be disposed class that the company will let go, but the disposal will not be in the form of sale but only through the distribution to your shareholders. So the since you would still be letting go of the asset class, the provisions of PFRS 5 will now be applicable. Okay, but to be technically correct class, as the terms that we will use, instead of fair value less cost to sell class, instead of fair value less cost to sell, it will now be fair value less cost of distribution. Because when we talk of dividends, we will be saying to distribute dividends. Okay, so we are paragraph 5A is more of a housekeeping lang class as to the terms that would be used. So instead of classifying it as held for sale class, it would be classified as held for distribution to owners. So essentially the same thing, an asset would be disposed of by the company. But instead of being sold, it would be given to your shareholders as a form of dividend. But nonetheless, the intention to let go of the property is present. Okay, so paragraph 6 class, although this would not be a source of a lot of questions, okay, but it's important to understand that when you classify an asset as being held for sale class, the intention there is to recover the value of the asset principally through a sale transaction instead of continuing use. Okay, so remember that assets class should represent, should possess the ability to provide future economic benefits. And these economic benefits class would normally come in two forms. Number one, it can come in the form of money in the event that the asset would be sold. Or second way of receiving the benefit of an asset class is simply the benefit of its use. So it's possible that we will not get any money back from our asset, but we would not consider that as a complete loss because by virtue of our ownership of that asset, we were able to enjoy its use. Okay. So now, when we are talking about non-current assets held for sale, the decision is to recover the value or the benefit of the asset through a sale instead of continuing use. And as I mentioned earlier, I do not see this as a possible source of a lot of questions. But at least this would be a good chance to remind you as to the possible benefits that will be derived from an asset. It's not always about cash. Class. Benefits from an asset can come in the form of the use of the asset only. Okay. Now, this is the third takeaway I want us to have for our discussion on PFRS 5 class. As to when an asset or a group of asset or disposal group be considered as held for sale class. Two requirements. It must be available for immediate sale in its present condition. That's one. And second is that each sale must be highly probable. Okay? So the asset must already be available for your immediate sale in its present condition. No need for construction works, no need for additional labor to prepare it for its sale. The plan really is just to sell it at whatever condition it is at present. Okay, and second is that the expected sale must be highly probable. And when you proceed to paragraph 8 class, it would give you the indicators class as or the requirements before an entity can conclude that the sale of the asset is highly probable. So the third takeaway for our discussion would be the requirements as to when an asset can be classified as held for sale. Again, remember the two requirements class. It must be available for immediate sale in its present condition. Second, its sale must be highly probable. Okay, and next possible question class, follow-up question to that would be, when is the sale considered highly probable? And that can be answered by paragraph 8. Okay, we can identify at least four four reasons here, class, or four indicators as to establish that the sale is highly probable. Number one, management must be committed to a plan to sell the asset. Okay, the management must have a plan to sell the asset, and they are committed to such plan. That's number one. And number two, there is an active program, class, to locate a buyer. Okay, if these conditions are present, class, then it would support the conclusion that the sale of the asset is highly probable. There's a third, there's another point mentioned in paragraph 8, class, but which is somewhat similar to the second condition we've mentioned earlier, is that the asset must be actively marketed for sale at a price that is reasonable in relation to its value. Okay, I'd say that it is somewhat similar to the second requirement, wherein there must be an active program to locate a buyer. Okay, it's just that the third item here now involves the pricing, class. Okay, the second one just involves for the search for a buyer, class. The third involves now of the will now involve the price, because if you claim to be committed to sell it, class, but the price that you are listing the property for is very high, then that would hurt the position of the sale as being highly probable. Okay, and fourth, class, which could be very important and you should not forget, that the sale is expected to be completed within 1 year from the date of classification, class. And because of this requirement, the reclassification, class, would warrant the reporting of the asset as a current asset this time. Okay. But it's important for us to understand, class, that even though we expect the sale to be completed within 1 year, class, just because there may be an extension or just because we will not be able to follow the 1 year target doesn't mean the asset should no longer be reported as an asset held for sale. Okay, what is important here is the expectation, class. The expectation that the sale would be completed within 1 year. Okay, and such expectation is supported with the fact that we are actively looking for buyers, we are selling it for a reasonable price, and the management is committed to a plan to sell the asset. Okay. The fifth one, class, will be that there is no expectation for significant changes to the plan. Okay, so basically, this is in furtherance of the first condition we mentioned, that the management must be committed to a plan to sell the asset. Okay. And this is a common source for a multiple choice question, class. Which of the following will establish that the sale is highly probable? Which of the following will not establish that the sale is highly probable? Paragraph 8A, class, could be a good source for a true or false question. An entity that is committed to a sale plan involving loss of control of a subsidiary shall classify all the assets and liabilities of that subsidiary as held for sale when the criteria from paragraph 6 to 8 are met. Okay, so this is now talking about a subsidiary class, an entirely separate business. So an entirely separate and independent business, class, can be considered as held for sale.